Hello, everybody. All right, I'm going live on a few different platforms, so let me just double check and make sure everything seems to be working correctly. Looks like YouTube is good. Everybody, feel free to drop your questions in. So I'm going to be going over 5 tips that I think are really important for going forward in 2023, and then I'll just be answering questions all throughout. So I just got to check one thing to see if it's working in my Facebook group. That's where I always have trouble. So yeah, let me know if you can't hear me or whatever, but we will just dive in. So I sent out an email this morning and I got a few questions back from the email. So I'll just start with those. So the first one is from Talia. She said, I expect my business to bring in much less revenue this year. How would you suggest to approach estimated quarterly taxes, which are based or can be based on the prior year's numbers? So this is actually one of my tips I was going to talk about. I'll just touch on it right now. But typically, the IRS wants you to pay taxes throughout the year if you're going to owe over $1,000 at the end of the year. So the exception to that is if you've already paid 100% of your prior year tax liability. If your prior year tax liability was a lot higher than it's going to be this year, then instead you can pay based on 90% of the current year tax liability. So, but then there's the complication of, okay, well, what will my tax liability be? And so there are some estimates that need to be made, and you can use online tax calculators to help you determine that. But that is, and I'll talk about that again. I just wanted to answer her question first because she's the first one to send me a question. So next, I got one from Nancy. She said, my question is concerning filing an extension, which is a relevant question for this time because some of us might not be done with our taxes yet. She said, I'm not sure how to figure the amounts on lines 4 and 5. And she's talking about the extension form, which is form 4868. So if you just Google form 4868, you'll get the IRS PDF version of the form that you can just print out. It's not even one page. It's just the voucher at the bottom of the first page. You just put in your name, your social, your address. That's part 1, and then part 2, you're supposed to put an estimate of what you owe and send payment with that. But even if you don't send payment, even if you just put in zeros, that's better than not doing anything because the penalties for not filing on time are a lot more severe than the penalties for not paying on time, which is the opposite of what some people might think. So even if you can't pay, make sure you at least extend your tax return if you owe anything. If you're getting a refund, the IRS doesn't care if your tax return is late and they're not going to send you any penalties. But if you do owe tax, if you do owe tax and you're not going to be able to file on time, mail in that extension. It has to be postmarked by tomorrow, tax day, April 18th. Usually it's April 15th, but because the 15th fell on a weekend and because today's a federal holiday, tax day is tomorrow. And I'm just going to say real quick before anybody who's on here now leaves. Okay, so I'm skipping around, but my 5th tip is to educate yourself. And that doesn't mean you have to become a CPA or become a tax preparer, whatever. It just means hopping on to random things like this. If you got a few minutes, pop on, learn a few things or just confirm that you're already on the right path. But I just wanted to let everybody know that tomorrow, Reseller Tax Academy, which is my tax course for beginning and intermediate resellers, is on sale for $99 off. That's a 24-hour sale only. So it's only good for tomorrow. So you get almost $100 off, and the rest of it is deductible. So I'm going to say that now, and I'm going to move on to the next question. So let's see. Emmanuel asked about maker's depreciation. So nobody tune out yet just because I'm talking about depreciation. So I'll just address it really quickly. So that just stands for a modified accelerated cost recovery system. So that's basically just the method of depreciation that is required for the most part. So if you have a vehicle, you can deduct either your mileage or your actual expenses. So you have to choose one or the other and typically stick with it. If you choose the mileage method, you get 60, is it 64 and a half cents per mile? It might be 65. I forget what it is for 2023, but it's 60 something cents per mile that you can deduct. So for people who have a low cost vehicle who are driving tons of miles, that can be a pretty significant deduction. So that's something you want to track throughout the year using an app like Mile IQ. Um, Hang on, I'm just checking. Okay. If Sorry about that. So the other method is the actual expenses method. So if you don't do the mileage, you can do the actual expenses, and that involves just deducting the business portion of your your vehicle. So your gas, your insurance, loan interest, and a component of that would also be depreciation. So you can actually deduct the actual cost of the vehicle through depreciation. And typically you can't deduct it all at once. If you buy a new car for $30,000 and let's say it's 100% used for business, you can deduct 100% of the $30,000, but it typically has to be done over 5 years through what's called maker's depreciation. There's something called Section 179 depreciation. There's something called bonus depreciation, which in some cases allows you to deduct the full cost of the vehicle. Um, so that's what that is. Debbie asked, oh, I could put these up on the screen, at least on YouTube. She said, where do we put our platform selling fees and store fees for expenses? So most of you are either sole proprietors or maybe single member LLCs. In that case, you're filing your taxes on a Schedule C of your individual income tax return. And I typically put the platform fees and the shipping on the other expenses line. It's like line 45. That might be totally wrong. Or is it 25? I don't know. There's an other expenses line, which when you enter stuff in that, it makes you actually write out the name. So I just put eBay fees and then the number, or shipping fees and the number, Poshmark fees and the number. It doesn't really matter. I mean, if you stick it all in office expense, it doesn't really matter. It's all going to yield the same net profit. So hang on a second. Just making sure I don't miss anybody. I'm going to say it, Josh. You said, Harry Tornado says, do I have to pay taxes? Is jail really that bad? Don't even know what to say. Okay, okay, I'll address the first part of that. People ask, so what if I only make $5 profit on eBay? Do I have to pay? Yeah, you heard. Should we get a CPA to do our taxes, or do you think H&R Block or other preparers? Okay, so I mean, it's honestly it's hit or miss with the CPA. Maybe it's more hit with H&R Block. A really good question, because I get people coming to me. Well, usually they're switching to me either because they just want somebody who's more familiar with reseller taxes, or maybe they didn't have the greatest experience with their prior CPA or with H&R Block or whoever. But if somebody is happy with H&R Block, typically they're not going to come to me. So I don't really hear the good stories. So I probably have a skewed perception. But I do want to do a YouTube video next year where I get my own personal taxes prepared at H&R Block. So I'll let you know. Why the okay? Why is everything so with taxes so confusing? Yeah, I mean it's ridiculous. It is ridiculous. I'm with you there. And sometimes people are like, "Well, you're just part of the system." I mean, yeah, the whole political system that influences the tax code. Don't know. Yeah, so today is Emancipation Day, so that just became a thing in 2021, so it's a federal holiday. Um, is QuickBooks Self-Employed app a good way to track your expenses, revenue, or is there a better way? So so let me just start with my I'm gonna be kind of all over the place, but I'm gonna start with my first tip that I think everybody should really take seriously in 2023, and that is to track your business activity and track it separately from your personal activity. And that's just gonna make your life a lot easier because you're not gonna have all your personal expenses and transactions enmeshed in there with your business. And then when you go back at tax time and you're trying to carve everything out that's business related, you are not going to have as accurate of a tax return. So you're going to be overpaying your tax, or you're going to be underpaying, in which case the IRS is going to be looking for you. And you're not going to have good insights into your business, and you're not going to be able to make the decisions that are going to help you grow and stuff. So, at a minimum, just put it in a separate bank account, and then it's going to be that much easier if you ever decide to go further than that. And by going further, I mean layering on some type of bookkeeping system. And that's where this question comes into play: is QuickBooks Self-Employed good way to do it, or something else? So QuickBooks Self-Employed is like the bare bones or the simplified version of regular QuickBooks, which is QuickBooks Online, really. It doesn't have asset and liability accounts. It just has income and expense accounts, which is pretty similar to GoDaddy bookkeeping for a lot of you who used to use that for eBay. So I do think it's a good way to get started at a minimum, because QuickBooks Online can quickly become overwhelming and become incorrect if you don't spend time learning how to do it. But yeah, there's no one size fits all. I mean, you don't have to go out and get a subscription bookkeeping program. You could use a spreadsheet if you're comfortable with spreadsheets. Um, there's a new one out there from the maker of GoDaddy bookkeeping called Seller Ledger. Still in beta version. I don't know much about it, but that's something to check out if you sell on eBay. Um, Reseller Genie. I think you just need to try different versions. Okay, let's see. Bethany says, using the cash method of accounting and not valuing inventory, should the cost of inventory for online jewelry resale be reported as cost of goods sold? Cash method of accounting, not value. Yes, the should the cost of, yeah. So if you're reselling jewelry, then when you purchase it, you just deduct it immediately. I think that's what you're asking, and I'll dive more into that too. So Claire is asking, I live in a county in California that's eligible for the October filing extension. Do I need to designate that I would like to file within the extended time period? Um, I don't think you need to do anything, and I do think it applies to state taxes. So there's a bunch of IRS designated disaster areas, which if you live in one of those, you don't you don't have to file the extension to get the extension, you just get it automatically. And not only do you get the extension to file later in October, but you also get an extension to pay. I think, I'm pretty sure. I've been so busy with preparing taxes, I haven't looked into the automatic extensions that much, but I think it's also an extension to pay, which is not the case with just a regular extension. So when you file your form 4868 to extend, that's only an extension to file, but not an extension to pay. The IRS doesn't really give extensions to pay, unfortunately. They will put you on a payment plan. If you Google IRS installment plan, you can set up a payment plan. But that's how it is. Pokemon Dentist. They say doing my reseller taxes on the Cash app and the Schedule C part is kind of tough to figure out where to put everything. Any tips? Hmm. I think they mean like Cash App where they get their like Venmo or where they get their income. I mean, first you would just need a summary of your income and expenses. So if you have your total income or sales that you generated during 2022, you would enter that as your income. If you had any returns, you would back those out on line two. And then you just want to have the different expenses that you incurred, like the total supplies, the total software, total cost of goods sold that you incurred. And if you're using TurboTax or something, you should just be able to go through their interview questions and enter those amounts. But yeah, that's where the bookkeeping piece in that number one tip of tracking your activities so you can have that profit and loss summary at the end of the year. That's going to help you put your taxes together. Or if you're having somebody else do it, it's going to help them. I mean, I require all my clients, if they don't already have a profit and loss, they have to fill one out in a form that I have. And that's a lot easier for them and for you if you've been keeping track of stuff, or if you have a separate bank account at least. If my inventory is a combination of things I purchased and things from my basement that I've had 10 plus years, do the items I already own have a cost of goods sold of zero or a cost of zero? So I have a YouTube video on this about selling personal items that would be helpful to check out. But yeah, I mean, because this is how we all start out, we sell our personal stuff. So what do we deduct? Do we even get a deduction? And the answer is yeah. So if you bought stuff 10 years ago, then you can deduct um, typically what you paid for it. The official rule is the lower of the market value or the cost. The trouble is none of us remember the cost, and market value is really sub I forgot the word. Okay, subjective. Um, unless it's something that would have really gone down in value, like electronics maybe or something, or maybe sometimes those go up. I don't know. Typically, I'd go with the original cost, which you don't have, so you'd have to estimate it. But yeah, check out that video. Okay, question from Mimi. I live in California in a county that got an extension to file. I owe capital gains taxes. Do you know if I can wait to pay? Again, I think if I'm wrong, I'll feel really dumb, but I'm pretty sure you get an extension to pay as well. Appreciate that. Um, Elizabeth says, I recently ordered blinds for my home office space. Would that go under the home office deduction as a direct expense? Yeah, that's a good question. So the home office deduction, there's two methods you can use. And the regular traditional method, you can use a percentage of a lot of your overall home expenses. So if my office is 10% of my entire home, I can deduct 10% of my mortgage interest or rent, property taxes, homeowners or renters insurance, utilities. But those are indirect expenses because you're taking a percentage of overall costs. But if you have direct expenses that are specifically for your space, like she put in blinds in her office, then those can be taken as direct expenses, which means instead of getting 10% of the cost, she gets 100% of the cost. At what point do you think it's best to consult with a tax strategist or a planner? That's a good question. So if you have, I would say the more complex your financial or tax situation is, the more it could benefit you to either just learn more or yeah have a consultation with a tax preparer, with a financial professional. So I mean, a lot of people who work with W-2 jobs, all their tax return consists of is a W-2. You enter how much your W-2 says, how much tax was withheld. It calculates the tax, and then you get your refund or you pay your additional tax due, and that's it. There's not a lot of flexibility you have, not a lot of options you have to optimize your tax situation if that's all you have. But if you have a business, if you have kids who are going to college or just yeah, just the more moving pieces you have, the more opportunity there is for um, savings and for optimization. Okay, two questions. Will you be able to do tax returns after tomorrow? Yeah, so some people don't even know I do tax returns. I've done several hundred this season, and really, it's easier to do them after April because that means in theory the person has filed an extension, um, and there's just more time. I'm not as busy. So, okay, my girlfriend and I are trying to figure out taxes for sports cards. I buy big lots of cards, pull a few for grading, which is the largest cost, and sell or donate the remainder, some in lots and some individually. Um, Looks like it cut off your question. If we use the average costing method for, that's all I got. Okay. I'm sure I'll see it later, but I think I know the question. So you buy sports cards and lots, you pay a fee for it to get them graded, and sounds like most of the rest you get rid of, the ones that you don't want to resell. So I would probably just assign the cost of what you pay. Well, there's two ways you could do it. Yeah, there's a few ways you could do it, and the key is just to be consistent with how you're valuing the cards or how you're costing the cards. So if I buy 100 cards and I for $100 and I only keep two of them, me personally, I would probably just I feel like my brain's going too many ways with this one. So yeah, you could just you could divide the $100 over every single card and assign every card a value of $1. Or you could say, well, only 5 of these cards are worth it. No, let's say only 10 of these cards are worth anything. So I would assign $10 for each of those cards and the rest of them just get rid of. So I guess my main answer there is you have some flexibility of how you cost the cards. The trick is just to be consistent. Heather says, I know what my cost was for each individual item sold last year and the total cost of goods. How is that put into Schedule C? So I'm actually going to make a video about this. This is going to be my next YouTube video, hopefully in the next week or two, because I get a lot of questions from my clients about how to enter cost of goods sold just on the forms that I require of them. Um, and because on the Schedule C, it wants you to put in your beginning inventory, your total purchases, and your ending inventory. And using those amounts, it calculates your cost of goods sold. So what if you're somebody who just tracks your cost of goods sold and you're not tracking your beginning inventory or your purchases or your ending inventory? How would you enter that? In that case, you would just enter that actual cost of goods sold number right on the purchases line of the tax return, and then you would put zeros for beginning and ending inventory. It's what I call the shortcut method or the lazy accountant method, because you're not giving it the inputs, you're just giving it the output. You're giving it the output as an input so that it calculates the same output. So it's zero plus your purchases, which is really your cost of goods sold, minus zero equals your cost of goods sold. So you just use that shortcut method. And again, I'm going to post a video on that. Are you okay? Rachel said, are you answering questions in the Ask a Question feature? I didn't even know about that feature, but now I am, if you want to do that. Anyone watching can send and see questions here. I'm talking about Instagram, by the way. Okay, can you explain why Poshmark's 1099K is higher than the gross orders in the Poshmark seller's report? So some platforms include sales tax in the 1099 number, others don't. It depends. And even if they say they do or say they don't, they still may or may not do it. Because eBay now says that they don't include sales tax in the 1099 on sales that they're collecting for. But I've still seen 1099s versus sales reports that are way out of whack, and I don't know what else it could be. But anyway, the 1099 numbers often include additional transaction numbers in there that are not actually sales. Um, so that's typically why. And then the problem is if you report on your taxes a number less than what the 1099 shows, the IRS is going to send you a letter and say, hey, why didn't you report all your taxes? So it's definitely not a perfect system. So what you do is, if that's the case, then you report the 1099 number, but then deduct the difference. If there's a bunch of sales tax and other garbage in there, you got to deduct that out so that the net sales on your tax return equals or is consistent with your actual sales. And then you won't be being taxed on numbers that aren't really sales. There we go. Yeah. So someone says estimating taxes worries me. You never know to what degree you can guess. Yeah. But if you feel like like the current year was similar to the prior year in terms of your income or business activity, then you can just use the prior year number as a proxy for your current year, and typically you'll be okay. So Jesse says, does the current extensions for places like California work? Yeah, so we talked about that a little bit. I think they're automatic. You don't have to file anything for that. I don't know if you actually have been affected or show that you were affected, or if you just have to be in the county. I think it's the latter, but again, I'm not 100%. Is there a point you would recommend a small business just gets a tax accountant to do it all for them? Like, is there a dollar amount you would suggest assistance? Um, it depends. Like, if I have some, I mean, I know some resellers who are pretty financial savvy, and some people like doing it themselves and sort of being in control. And if that's you, I don't think there's anything wrong with that. Again, though, the more complex your situation gets, do you feel comfortable handling that, or do you want to let somebody take a shot at it who does that every day for their main job? And I mean, it might be worth doing it once if that's you, and if they give you a tax return back that looks pretty much exactly like you would have done it, you might say, "Well, I think I'm good for now." But it's something you can reassess every year. I'm not. There's some people out there, and this kind of bugs me. Every time somebody asks a question, they just say, you need a CPA or go talk to a CPA. And I'm like, I don't think everybody does. I don't think some people can do it on their own. I think that's okay. So it's just your comfort level. But then again, there's some people who think they have it under control who might not. They might be leaving a bunch of money on the table. Let's see. Trying to see if I already answered this. So I'm good for at least another 30 minutes, and if we still have questions after that, we'll just keep. Well, we'll see. Um, Oh, Daphne, I did see this. I was going to get to this, I promise. She says, can we prorate the Amazon portion of the Amazon Prime membership fee? So yeah, definitely. I mean, most of us were probably paying for that with a personal bank account. Um, But if you think it's 90% or whatever percent, if it's 50% for business, then deduct 50% of that fee. Definitely. And I have a handful of bookkeeping clients, and I'll see that Amazon Prime membership fee on there coming through their business account. And yeah, we'll deduct the business portion. I also see stuff coming through like Disney Plus or Netflix, and I'm like, I'm pretty sure that's. I don't know if you could get away with deducting any of that for business. So that stuff we have to mark as personal. Does depreciating a business vehicle have any downsides to the business or give a red flag? So it does not give a red flag, but it might have a downside. So if you decide to depreciate a vehicle, that means that you are using the actual method for vehicle expenses. Remember, you can use either the mileage method or the actual expenses method. If you're using the actual expenses method and you depreciate the vehicle, typically you have to stick with that method and you can't later down the road switch back to mileage. So you just got to make sure that that would be the most beneficial thing for you over the long term. So if you, let's say you bought like an old car for $5,000 and you're like, oh, I just want to depreciate that. You can deduct the full 5,000 most likely in the first year, but then you're stuck going forward and you're not getting any further deductions because you can't do mileage. So again, you just want to look at whichever one's going to give you the most long-term benefit. If you buy a car that's $70,000 and that has a legitimate business purpose, say it's like some big cargo van or something, but you only use it in town and you don't actually drive it that much, and you wouldn't incur very much mileage. Otherwise, that might be a better, a more advantageous method. Looks like I'm. Let me know if I'm still breaking up. I apologize for that. Might be having some bandwidth issues in my house. Looks like that was a few minutes ago. Okay, I'm going to slip in my number 2 real quick. So first one was track your business activity. Second one is determine how you want to account for inventory. And I I don't like talking about this because it can get a little complicated. So historically, the required way to deduct your inventory was only to deduct it when you sell it. So when you purchase it, that's not a deduction. It becomes an asset. But then when you sell it, you can deduct it at that point, which is why the tax forms are designed like they are, where it wants your beginning inventory, your ending inventory. It doesn't allow you to deduct that ending inventory. But within the last few years, they keep messing around with tax laws and stuff. And now you have flexibility to actually deduct what you purchase when you purchase it. You don't have to wait until you sell it. So that's what I refer to as the cash method for inventory. And that is if you really value simplicity and your business is just, let's say it's kind of a something you do on the side, you're not actively trying to grow it, or you're not trying to like blow it up, I might suggest that method for you. If you are trying to grow a lot and you want more insights into your books, then I would probably stick with the accrual method for inventory, which is the first one I mentioned, which is where you deduct it when you sell it. And I have more information on that out there in a video on that too. Diana asks, if you have tons of inventory without any idea of your investment, where do you start when selling an item to determine your cost? Yeah, I don't know if you're talking specifically about personal items, but I would still look at my personal items video because I talk on there about how to estimate the cost or how to estimate the market value. So another common question is, if I don't have a receipt, can I still deduct it? So in my view, if it's an expense that you actually incurred, then it's deductible. You're not lying. You actually spent that money in your business, so you can deduct it against your income. It just means that if you were audited, which is unlikely, and in the even more unlikely chance that the IRS said, I want to see a receipt for that transaction, if you couldn't produce it, in theory, they could say, well, if you can't prove it, then we're going to just remove that deduction. They're not going to send you to jail. They're just going to disallow that deduction. So I think it's worth the risk, which is almost nothing. Um, so some people say, should I even include the personal items that I'm selling in with my business? Or other people are like, oh, I don't want to include those. And I say, no, you should include those because typically you are selling your personal items for less than you purchased them for, meaning you're incurring a loss on those personal items. And if you have losses, items that you're generating losses on, those losses will only benefit you if you include them in your business. So if all my business items give me a profit of $1,000 and I sold some personal items too, which gave me a loss of $500, if I put it all together, instead of having to be taxed on the full 1,000, I'm gonna come down to 500. Was Poshmark supposed to mail us a 1099 or can we pull it from the app? If they did issue one, usually they have like an online reports portal with tax reports. You should be able to pull it there. If they didn't issue one, then I just wouldn't worry about it. You're still supposed to report that income. Um, either way. Okay, I don't see your name, so I don't know. I can't tell who you are, but they said I'm very small, and Mark did my taxes this year. It was 100% worth the cost. So I'm not saying that to pitch my services. I'm just saying, so I typically charge, um, like it's a $450 base fee if you have a business, like a sole proprietorship, a Schedule C. I mean, that is a big chunk of money for a lot of people. I don't like spending $450 on anything. Um, But with the taxes, I mean, there's a lot of little things that you might not have put on your tax return otherwise. It's not that hard to find $450 of tax savings on a tax return. We could say, well, why don't we use the regular home office deduction method rather than the simplified method? Or we've talked about auto depreciation. Maybe that could save you some money in some cases. Or I don't know. You know, but there's a lot of different little things. Having that a tax preparer can do. Just there's a lot of things that they can't do. So like if you've been operating a certain way throughout the entire year, there's only so much magic that a tax preparer can work at the end of the year. You're because if you should have been an S corp, which could have saved you $10,000, you can't always go back. You can't go back in time and do that, so you can realize that benefit. But there are a few little in just um, um, but anyway, yeah. So the whatever cost that you're paying to do your taxes, ideally you're getting that back through the tax savings that the person's saving you. Okay, so I'm looking at Instagram. And Jesse says, we're a military family. We have some local military families who needed help on gifts for Christmas. We gathered lots of sale inventory and gave it to them. Because we don't have a way to have a receipt, can we write this off? So if you donated business inventory, like if it was business inventory, you would just deduct that as cost of goods sold. It's as if you sold it for $0. So you get zero income and you still get to deduct the cost. But there's not an additional donation deduction that you get on top of that. And she says, if you weren't good at keeping inventory and cost of goods sold and wrote everything off the first 2 years of your business, let's see, on the third year, can you start tracking everything, inventory and cost of goods sold for individual products instead of just writing everything off? Um, I don't know if I understand 100%, but I think the answer is yes. I don't know if you're asking, can I switch from the cash method to the accrual method? Which the answer is also yes. They don't want you doing it every year, but you can switch. But yeah. So another one, I'm a reseller, but sitting for the bar exam, can I write off a portion of bar expenses as it will help with reselling? That would be a very aggressive tax position. Most would probably say no. So you can write off education expenses. Again, Reseller Tax Academy, which is my course, is on sale tomorrow for $99 off. And the rest of the cost that you will be incurring is tax deductible. And it's deductible because it's 100% relevant to your business. Most of you are already selling stuff. You already have a reseller business, and any education or course that you take that that makes you a better business person within your specific industry or business is 100% deductible. But if I'm a reseller, but I'm like, oh, I've always wanted to be a plumber, so I'm going to go take a plumbing course. So that course would not be deductible because it's not part of a business that I already have. And this is something you can read about further, but so my wife has a childhood friend. This is a few years ago. She emailed me or emailed us a PowerPoint presentation that her professor gave her. So she was starting out an MBA program, and the professor was like, "Guess what? All you have to do to deduct your MBA tuition is, set up a business." And I don't know, it was this whole really sketchy tax strategy where he said that you can deduct the tuition because it's part of your business. But I just don't think it would fly. So anyway, I mean, it's worth looking into, but I'm 95% sure that unfortunately you could not write off that stuff. Okay, going down the line, let's see. What happens if an LLC gets sued a lot of times? Will it be forced to dissolve? I don't know. I mean, maybe yes, maybe no. I don't think so. That's more of a legal question. But this brings up another important question: is what is the benefit of an LLC? And that is, I mean, the main benefit, the reason they exist is because they give you limited liability protection. That's the main benefit. So if I have personal assets I want to protect, or if I'm operating in kind of a risky industry or platform, then an LLC might be a good idea. Because if somebody ever does sue you, they're limited. They can't go past your business assets and come after you personally. So that is, but I mean, a lot of you and a lot of us sell. I sell like spoons and stuff, and a lot of you guys sell clothing. So it's just not very high risk. So it's not necessarily urgent to go out and get an LLC. Um, but it can open some doors for you if there are certain banks and vendors you want to work with, or it's also important if you want to eventually do an S-corp. Okay, so this is a good segue into my number three. I got to get all five of these in here. So my number three is determine your best business structure. And by that, I mean, are you a sole proprietor? Are you an LLC? Are you an S-corp? Are you a partnership? Um, so which one's the best? I mean, I encounter too many people who, before they even started, somebody told them, or they just went out and did it. They formed an LLC and maybe even an S corp, and a lot of times it comes back to bite them because they just don't need that much that soon. So, but the typical progression is you're a sole proprietor by default. You don't have to go out and set up anything special. or anything formal, I mean, the minute you start selling your stuff online, the IRS considers you to be a sole proprietor if you're doing it with the intent to make a profit. And then if you decide you would be a good idea for you to have some liability protection, or if you know you want to eventually do an S corp, you can't get there without an LLC. So you would want to form an LLC, which is a limited liability company, and that's formed at the state level. It can be a single member LLC, or it can be a multi-member LLC with multiple people. Um, and then most people probably stay there. But in the taxes when you're an LLC are the exact same as if you're a sole proprietor. So if you ever hear somebody says you need to go out and do an LLC because it'll save you a ton of money, they don't know what they're talking about, because it's the same exact tax implications. Where you do have different tax implications is if you are an S corp, and it's kind of different because it's not technically an entity. It can't exist on its own, but you can. It's called a tax election, and you can layer it on to an LLC or to a partnership. Um, and it basically just means that the IRS is going to tax you differently. So sole proprietorships and LLCs are subject to self-employment tax. So self-employment tax is basically a 15% tax that takes the place of Social Security and Medicare when you're self-employed, and it's in addition to regular income tax. So as an S corp, your earnings are not subject to self-employment tax. So if you have $100,000 profit as an S corp, you're basically saving $15,000. And it's not that simple. There are a couple other things you want to look at, but but at least consider it when you exceed the $30,000 to $40,000 of annual profit. So that is my number 3. Determine your business structure and make sure you have the best one. You make sure you're optimized. I mean, I sometimes I'll get a new tax client and they're just a sole proprietor, Schedule C, and they made $150,000 of profit. And I'm like, oh, you could have saved, I don't know, $25,000 if you had been an S corp. And sometimes we can go back and implement that retroactively, but not always. Oops. Okay, hang on. Oh man, this is awesome. We're getting lots of questions. I was afraid doing it midday, might not have as many people. Okay, what if you have written checks for inventory and they haven't been cashed in the tax year? Hmm. That's a good question. If most businesses are on cash basis, and I'm not talking about inventory, I'm talking about overall cash basis, which means you deduct expenses when the cash actually leaves. If you were using accrual when you wrote that check and sent it off, you'd be able to deduct it right then. If you're using cash method, the question is, I think so. I'm going to check on that, because they could look at a check and be like, that's essentially the same as cash. I should know that, but I just don't want to give you the right answer. Sorry, I don't want to give you the wrong answer. I'm going to look at that. You can email me and check with me. So you're saying, so Jess is asking, so you're saying start with an LLC and we can move forward to an S corp later once our business is ready for it. Exactly. Yep. But like in some states, in California, an LLC is $800 a year. So if your business is only making $1,000 per year, you might not want to do that yet. Here's a good question. I wash the clothes I sell. Can I deduct the electricity and gas I use, but I don't know how much to deduct? Yeah, I would say especially if you're, especially if you're not already taking the home office deduction, then I would just come up with a way to reasonably estimate how much electricity and gas you're using. So if 50% of the loads of clothing that you're running are for business, then I would deduct 50% of. It's not that simple because you use electricity and gas for other things too. I mean, as long as you document how you're coming up with it, that's pretty much all you need. Okay. Yeah. So if you use the mileage method for vehicle deductions, MileIQ is a great app. Helps you separate out the personal versus the business mileage. So college student dependent. Usually the educational institution will send you a 1098, which is a form that shows how much tuition you paid. Student did receive tuition difference refund. Does parent file the form? Hang on one sec. I think my phone is running out of battery, so I got to see if I can plug it in. Okay. Hang on. All right, I might be a little crooked. Just gonna go a little sideways. It's what I do in my office. I find solutions. It's bugging me. All right, sorry about that. Okay, so I'm going to run through those real quick. So the first one is track your business activity. Second one is determine the best business structure. Nope. Second one is determine how to do inventory, cash or accrual. Third one is determine your best business structure. Fourth one that I sort of mentioned is to make estimated tax payments. So the best way to do that is to kind of look at last year and make sure you have paid what you paid last year. And then you're safe. You still might owe at the end of the year, but you won't incur any penalties. And I already talked about the fifth one too. The fifth one is continue to educate yourself. You don't have to take a bunch of courses. You don't have to be a CPA or a tax preparer. But if you do something simple like just come into stuff like this, like signing up for my course, which is $99 off tomorrow, you have lifetime access. And if you ever have a question, you can be like, oh, I think I heard something about that. It's not going to go totally over your head. You're not going to feel like a complete moron, which we hate feeling like, because you'll at least, this is advice somebody gave me when I did an internship. I was in school. I went and did an internship at Toyota, and it's like, oh my god, like it's really overwhelming. You don't have to know everything. As long as you know, even if you've just heard about it, you've been exposed to it. If you can just have that context to go back and know where to look. Let's see, track mileage. Yeah, right. So for an SCorp, I would typically think about or consider doing an SCorp or look more into it when you're at that $30,000 to $40,000 of annual profit, not sales. You're after you deduct all your expenses, so your profit that you're left over. Yeah, so some people use the cash method for inventory, and then they get thrown off when they go and do their taxes on TurboTax because it says, "What's your beginning inventory?" And you might say, "I don't know. I used the cash method." Or maybe if you're using that lazy accountant or shortcut method of the accrual method that I talked about, you don't need to enter your beginning and ending inventory anyway. And I am jumping around a lot. Um, and I know that can be overwhelming. So one benefit of enrolling in Reseller Tax Academy is it's all, methodically laid out in order. You can go back and rewatch as many times as you want, and it's all there. And it builds, each lesson builds on the prior lesson. Um, so I feel I'm streaming to Instagram on my phone, and I had to plug it in. So now it's crooked, and I feel really dumb that I'm streaming on a crooked phone. Um, one CPA, let's see here. One CPA suggests declaring everything on my 1099K and wants the taxes collected by Amazon to write them off. Um, So the Amazon 1099K is 2 pages. If you look at the second page, you can see they actually do a reconciliation of the 1099, and you can see the tax piece that's included in the 1099 number. So you could give him that or make sure he knows that that's there. But I would also just run a one-page summary sales report from Amazon. So if you the date range report summary, and then you can have that and compare it to your 1099 just to make sure that you're not reporting an income number that's way above what was actually incurred. All right. Anastasia says, is inventory based on the cost or what you have listed for on eBay? Um, your inventory deduction is your cost, what you paid for that item. And then what you sell it for, what you have it listed for on eBay is your income. And then you deduct the cost of goods sold from that. And that gives you your gross profit on that item. What do you do when you feel like you paid too much in taxes, not happy with the CPA? um, yeah, I mean, I would just try and determine, okay, is this really, was the CPA really negligent? Did they not take enough time to learn about my situation? Or did they optimize it the best they could and I just end up owing a ton of tax? Because, I've had cases where maybe somebody had way too much tax withheld from their W-2, or maybe they made some really big estimated tax payments. So let's say they paid in 10,000, but their tax was only like 2,000. So that means they're going to get an $8,000 refund because they overpaid their tax. So I've had cases where people have done that, and that's not anything I did, but they see this $8,000 refund and they're like, "Oh my gosh, you're the best CPA ever. My last CPA couldn't get me that much of a refund." So, and then there's the reverse situation where maybe you just owe because you owe, and maybe they got you all the deductions you could. So that's a tough one. Just determining are did they really do a bad job, or is it just what it is? So I think this live, it'll be saved. Yeah, I think it'll be saved on both Instagram and YouTube. YouTube might be better. Well, I don't know. They say the YouTube has cut out a few times. So I am not a YouTuber by any means. I mean, I have some YouTube videos, but I hope to Hope to level up a little bit with my video capabilities. Yeah, so if you get audited and you can't produce the right receipts if they're requesting them, or if you made a deduction that for some reason they don't agree with, they can disallow or just remove those deductions. So if the fewer deductions you have, that means your taxable income's going up, and then you would pay the difference. That was a question I got. So you just pay some additional taxes. Okay, let's see here. Yeah, so for Californians, the October 16th deadline also applies to 2023 estimated tax payments. Okay. Yeah, so there are, for 2023 taxes, there's a deadline on April 15th, June 15th, September 15th, and January 15th. So there's actually a deadline to pay your taxes throughout the year. And this person is seeing on the IRS article that you have an extension to pay your 2023 payments as well. So that, I mean, that can be a relief, but you also don't want to get behind either, because then what happens in early 2024, you have you'll have to pay all of your 2023 tax, and then you'll already be sitting on paying your 2024 tax. So just something to think about. Carmen, hey Carmen, she says, if you spend more than you earned, what is the tax form number I have to use to file my earnings again? My first year reselling did not sell more than $600. Let's see. So if, well, so basically she's saying I had a loss. What's the form I have to use? So whether you have an, I think this is what you're asking, whether you have a profit or a loss, you will report all that, report all the income and the expenses on the Schedule C of your individual tax return. And then either the profit or loss result will be carried over to the main 1040 tax return to be added to or subtracted from your other income. Jeez. So we have more questions than I anticipated, which is awesome. Just hope I can get through as many as I can. Yeah, so I talked about that one a little bit. Adding items to inventory purchased in previous years. So usually I would just add those to purchases, because technically your beginning inventory number should match your prior year ending inventory number. If they don't match, I mean, I've never seen the IRS call anybody out for not having them match, but it could be a flag. So if you're using the standard mileage deduction, you should not be seeing the depreciation form. So unless that's coming from, so it seems like, or maybe there's an additional vehicle. It seems like it's marked somehow to be depreciated. Okay, so Claire is asking about the qualified business income deduction, or QBI deduction. How exactly do I account for this on my taxes? So it doesn't go on the Schedule C. It does use the Schedule C profit to be calculated, but it does not go on the Schedule C. So it's a deduction worth 20% of your business profit. So if my profit is $10,000, I get a $2,000 deduction, but it goes on the main tax form on your 1040. And it only reduces your income for income tax purposes, but not for self-employment tax purposes. So you'll still incur self-employment tax on the full $10,000 of profit, but your income tax will be reduced by that $2,000 deduction. If That makes sense. But again, if you're using TurboTax or something, it should calculate it automatically. If you don't see it on, just look for it at the bottom of page 1 of your 1040. If it's not there, then you just got to dig a little deeper. Um, yeah, I touched on this a little bit. If you are, if you're a, if you don't, if you want to keep as few records as possible as far as inventory is concerned, and you really want more simplicity, then I would consider the cash method for inventory. If you're growing and you want your books to look as good as they can, I would use the accrual method. And so when I say accrual method, it means you just have to track your inventory, because you have to keep track of it, because you have to know what everything that's sold, how much did it cost? You don't know that unless you're tracking it. And there are different ways to track it and different ways to cost your inventory. And I talk more about those in my course and all over my Facebook group and stuff too. It's just more systematic. Orlando says, from my LLC as a sole proprietor, can I make a payment to an external credit card for a family member? How do I account for that in QuickBooks? Okay, so I think you're saying, can I use a business bank account to pay off a personal credit card account? And yeah, you can. And yes, especially as a sole proprietor, it doesn't matter. You can do whatever you want as far as the IRS is concerned. They don't care if you mix your personal and business. If you were an LLC, you do not want to mix your personal and business, because then it's a legal issue. If anybody ever came after you or your company, you might not benefit from the protection that the LLC is supposed to offer you, because they could say, well, you're not acting like a business. You don't have a business bank account. You're just mixing everything. And they could penetrate that liability protection. But if you're a sole proprietor, to be a good business person, you should separate them to make it easier on yourself, but you can mix. But anyway, yeah, if you make a payment from a business bank account to a personal credit card, you would just account for that in QuickBooks as if you took a distribution. It's an equity distribution. It's as if you took that money out yourself and then paid it. Yeah, so the lazy accountant shortcut. So it can be really confusing, because it can look like you're using the cash method when in reality you're using the accrual method. You just don't have the beginning and ending inventory. And if you don't know what I'm talking about, this is my next video. I commit to making it in the next week. It's going to be simple and informative. Hey, Jennifer, she says, is it normal to show you made less than usual on your taxes, although you were able to take monthly profit? Yeah. Yeah, I mean, I see everything. The IRS sees everything. Some people have losses a few years in a row. Some people might have a big profit and then a big loss. It just depends. Tandis says, if I received damaged inventory, not replaced or reimbursed, do I just reduce ending inventory count, or do I deduct the lost costs elsewhere? Yeah, just reduce your ending inventory, because the lower your ending inventory, the higher your cost of goods sold. Because when you sell more and more and more, it's going to reduce your ending inventory, which implies a higher cost of goods sold. So those items will be accounted for and deducted through cost of goods sold by you reducing your ending inventory. Someone said, I always thought any personal item sold should have a cost of goods of the fair market value. Is that accurate? not always. So it should only be the market value if the market value is lower than the original cost. Check out my personal items YouTube video on that. But yes, the lower of the original cost or the market value. The problem is, what's the market value? You know, one person over here might be selling it for this price. This person over here might be selling it for a totally different price. So this, I've seen a few different variations of this idea. So Alexis says, if the IRS knows what we owe, why don't they just tell us and then we can pay that? Why does it have to be so confusing? And there, I mean, there's probably uh, three different videos I've seen online where the person's sitting there across from the IRS and the IRS says, okay, pay me your taxes. And the person's like, well, I don't know how much I owe, but you do. Why don't you just tell me? And the IRS says, well, because I don't want to or something. I mean, those videos are funny, but they're not accurate because the IRS, they don't know how much you owe. If you have a business, if you're a W-2 employee, they get a copy of the W-2 and they have that income and they can do the calculation. And yeah, they know how much you owe in that case, but they don't have, and they have visibility to your 1099s that are being reported to them, but the 1099s aren't totally accurate and they don't have any visibility to your deductions. So that's the key to doing your taxes is only, I mean, that's the crazy thing when you grow up and you become an adult, right? It's like, wait, I'm supposed to tell them, I'm supposed to keep track of this and tell them what I'm earning. Like they trust me to tell them all the deductions that I can deduct in this business. I remember thinking that. I was like, that seems like kind of like a flawed system, but that's how it is. And that's why it's important that we do keep track of our own numbers or if we're at a point where we can justify having somebody else do it for us. And that's one way you can optimize your tax situation. Because a lot of people do just rely on the IRS. A lot of people get a 1099 um, and they'll think, oh, it's like a W-2. I just plug it into the TurboTax and that's it. But if all you're putting in is the 1099, say $10,000, you're going to be taxed on that full $10,000. You need to have a record of all the deductions you can take against that. Maybe you had $12,000 worth of deductions, so you actually have a loss. So, are gift card sales considered income? I need to do a video on this too. Um, gift card sales. Yes. So if I purchase a gift card for $100 and I sell it for $150, then I'm taxed on the 150 and I can deduct the 100. And I think there's more layers of complexity we can add there. If you go to my website and scroll down, I do have inventory tracking sheets that are I mean, they're really intended to help people track their inventory for people who are doing the accrual method for inventory. But it also has like an optional profit and loss template on there. Some people like it. It's okay. I really want to beef it up. That's one of my projects this summer after tax season ends tomorrow. This is a good question. I have probably 3 clients who sell thousands of trading cards and they send them in to get them graded. So I'm familiar with that. Um, I don't even remember where I landed on this. I think you could include the grading fees as part of the actual cost of the card because that's one of the fees that you're incurring to get it ready to sell. Um, maybe it depends when you do the grading. Like, are you listing it before you're grading it? I'd like it. I might have to do more research on that, but I think right now I'm comfortable with either including it in cost of goods sold or just expensing it separately. But that's one I could go either way on that. I might have to do a little more research on. If you change, Elizabeth has a home office question. If you change the square footage from one year to another, is that a red flag? Nope. No, because I might use one bedroom at home that's 100 square feet, and next year I might use two bedrooms. So my home office square footage is going to increase to 200. That should not be a red flag at all. How do you estimate for your first year in business? Estimate taxes. Is it frowned upon to do unequal quarterly payments? No, not at all. So I would just look at if it's your first year in business, typically you won't, even though if you're profitable, you'll owe money at the end of the year in a lot of cases. But if it's your first year in business, typically you won't necessarily owe quarterly estimated taxes because you'll be in compliance with the rule that says that if you've paid or had withheld an amount of tax equal to last year, then you're good. So if you have a W 2 job or if you had no tax last year and you pay that again, then you're good. But let's say it's your second year selling, you would want to look at what your tax liability after credits was for the prior year and then just make sure you pay that quarterly throughout the year. Mara says, do you check that you have student loans in taxes if you haven't graduated yet and not paying on them? No, typically student loans will not affect your tax return unless you're paying on them because you can deduct the student loan interest. Or if you're currently a student, then you can qualify for some different education deductions. Maybe, geez, maybe I'll do this again tomorrow. I'll go at least to 1:30, 3:30 Eastern time. I can just if yeah. Sometimes I just feel my words not starting to come out right. I am a single entity LLC and use the accrual method for inventory. How do I switch from accrual to cash? What do you do with pre-inventory? Yeah. And I talk about this in my course as well. So you can switch from accrual to cash. Basically, so you're sitting on a bunch of ending inventory that has not yet been deducted if you've been doing it correctly. And if you switch to cash, that just means you'll basically do an adjustment to deduct all that stuff that you haven't yet deducted. And going forward, you'll deduct everything as you purchase it. That's the easy way to do it. It's a little trickier if you switch from cash to accrual. Um, but yeah, you can do it quietly. You can do it. Might not be the most correct way. You can do it quietly by just listing your ending inventory as 0. And then by doing that, it'll take the cost of goods sold deduction for everything that hadn't yet been deducted. I think the more correct way to do it might be to do what's called filing a Form 3115, which is this ridiculous, crazy form that you have to file for lots of different kinds of changes in accounting principle. But the fact that the whole inventory cash accrual thing is kind of gray anyway, it's like, do I really go through a formal process to make a change for an area that just has all this gray in it? And I think I talk about that in my inventory video and also in my course, but and depending on your size might determine what I recommend there as well. Hey, Michelle, she says, are my dogs home security and I can deduct their food and pet food and vet care? So, like, can my dog count as a security dog, which I can deduct as part of a business expense? even if it's 25%. Uh, Probably not. Like in theory, yes, that could be possible. But um, if like if yeah, if the specific purpose of purchasing the dog was for security and you have that documented somewhere and he's like specifically trained in security and you have the documentation, then yeah, obviously, I mean not obviously, but that would strengthen your case a lot. Um, so yeah, it's possible, but in most cases that people want to do it, I would say not likely. Oh man, so proud. I was supposed to pay mine 2 days ago and I have not. So I got to do that this week. Um, yeah, so April, or is it, you know what? Maybe April, that's a good question. Because April 18th is the tax day. So does that does that also make the first estimated tax deadline the 18th as well? My guess is yes. Good job. Your order's dollar amount isn't the same as your gross income dollar amount that you report. Is that right? I think they are the same in general. No. So if people are paying you for shipping, you have shipping income too. So you would have to add the shipping income column to the orders column. I mean, it depends on the platform you're on and the specific kind of report you're looking at. For what reason could you deduct Amazon Prime? I mean, like I don't know if you're a drop shipper and maybe you open an Amazon account specifically to order stuff that you then send on to clients, or if you source from Amazon. Let's say if all your Amazon orders 80% is for sourcing that you're doing, then you could deduct 80% of your Amazon Prime subscription. So Mimi is asking about the cash method and non-incidental materials and supplies. So if you watch my video or look at my article on this, I say that the non-incidental materials and supplies portion of the tax law is irrelevant. Um, but anyway, if you're using the cash method, do you deduct that under other deductions? No, I just put it as purchases with beginning and ending inventory as zero, and then the purchases flows through to the cost of goods sold, and it just shows up as cost of goods sold. I want to pull my money from eBay for personal needs. How should it be accounted for? So that would just be a distribution. It's not a deduction. You're taxed on your income, on your profit, regardless of what you pull out of the business. So if you make $10,000 profit and leave it all there, you're taxed on $10,000. If you make $10,000 profit and you pull it all out, you're taxed on the $10,000. But if you're doing bookkeeping and you take it out, you just classify that transaction as a distribution. It reduces your equity, your ownership in the business, but it does not count as an expense. Let's see. Okay, here's a good question. What are situations where you can retroactively apply the SCorp status? So again, SCorp is a tax election that allows you to not have to pay self-employment tax, and it can only be elected if you already have another type of entity in place, not including a sole proprietorship. So if I have an LLC already, I mean, so there's this thing called a late S election where you can retroactively elect S corp status going back, I think, 3 years. Um, but it's really only for those who were operating as S corps but basically forgot to file the paperwork. And I have a client that fit this situation. The main requirement of having an S corp is that you pay yourself a, a salary through payroll. Um, and I have a client who had been paying himself a salary through payroll all throughout 2022, which you're not supposed to do if you're just an LLC or a sole proprietor. So I was like, awesome. You were basically operating as an S corp. You already had an LLC. So we're going to go back right now in April of 2023 and elect S corp status as of January 1st, 2022. And you're going to save $20,000 just from doing that. But if you did not have the LLC, then you're out of luck because you can't be an S corp if you're not an LLC. Few more questions. You guys got to be as mentally exhausted as I'm starting to feel, or maybe you're not. Maybe this is energizing you. If it is, you should really consider joining Reseller Tax Academy and deducting the entire fee after the discount tomorrow, tax day. Geez, I think I'm an hour behind of the questions. Christine says, I completed my taxes through TurboTax as I usually do, but my return was very low. So I asked the Turbo professional to look at it, and she said it was right. Why were so many deductions gone? So you said your return was very low. I assume you mean your refund was very low, maybe? Yeah, it's hard to say without seeing it or seeing what's going on. If there were deductions that you think should have been there that weren't there, then that's something to look into. Yeah, I can't tell 100% based on that, the detail. So if you use the mileage method, you cannot deduct oil changes, cost repairs. That is correct. You can switch to the actual expenses method the next year if you want, but then you just can't switch back typically. Here's a good question. So what tax forms to file my taxes my first year? If you sold less than $600, you won't get a 1099. This is for 2020. Wait a minute. For 2023, the threshold is going down to $600. It was supposed to do that for 2022, but everybody freaked out and the IRS backed off. But for 2023, maybe they'll change it again. If you sell over $600, you'll get a 1099 and you'll be on the IRS's radar. Even if you sell less than that, you should still probably report the income on your tax return. Because if you have a profit, it's taxable. And if you have a loss, you still want to benefit from that. I'm going to check my calendar. Because I want to do this again tomorrow. I think we have so many questions that I missed. And I might start fading and sounding like I'm not as smart as I was when I started. And I want to maintain the quality and all that stuff. So I think I'll just I'm going to do this again tomorrow. I'll announce it. I'll email it. Tomorrow's my daughter's birthday, and she really wants the whole family to go see Mario, new movie. Let's see if I can squeeze in any more, and then we'll be done. Yeah. So is Reseller Tax Academy self-guided? Did I hear you say you also have a Facebook group for questions? Yeah. So we do at least monthly live Q and A's like this. It's a self-guided, so it's video. Go at your own pace, and then it has that live component which you can add on. You have lifetime lifetime access, and it's really all about helping you ditch the anxiety and the stress, feel confident. Um, it's not about helping you do your taxes because it's more important to help you learn what you should do throughout the year to be in a position so that when you do your taxes, they'll be fully optimized and you'll save as much as you can. Because again, there's only so much you can do throughout the year. It's like if you're not brushing your teeth, if you're not flossing, when you show up to the dentist, they're gonna be like, "Oh, I can't fix this all right now." But there's a lot of things we can do from today going forward, in that I can tell you to do. You got to work together. That's the analogy I like to use. Um, Yeah, so I have a hard time telling people no, but and it's easy to say yes, especially after tax day because I have a lot more time than I do from January to April. So and there's always turnover, you know. So I always have seems like I always have room for somebody who needs help. So yeah, we went 90 minutes and I still have people listening. So I think watch for I'll tentatively say same time tomorrow, but it might be different. So just watch for me to. I'll post it on Instagram and my Facebook, and if you're on my email list, then you'll get that too. So yeah, thanks everybody. I'm pleased with the turnout we had. I won't have a crooked Instagram screen tomorrow, and I'll see if I can save these questions, and we'll just kick. I'll just dive right in with all these remaining questions I had. Um, so good luck, everybody. See you here tomorrow. Talk to you later.